welcome to the market update. I hope you guys had a good week trading this week. Let's start with the S&P here, S&P 500 ETF, Spider, weekly. And we've been, where is my crayon? Let me bring out my crayon here. And we've been, there you go. So we've been following this 200 VWAP here. And you can see in 2016, that's where we saw reversal there. In 2011, right, this was 20% decline, this was a 15 and 15% decline, and this was a 12 or 11 and then 20% decline. And you can see that's where we saw the moving average hovering in that vicinity, and we are seeing a follow through here. We're now 1, 2, 3, 4, 5th week. First week we saw bullish piercing candle, pierced 50% of its previous body, right? And then we saw a follow through, another follow through. Those 3 weeks we saw what we talked about. We said that we have 3 white soldiers, right? I mean, it's not perfect textbook 3 white soldiers, but we did have properties, the characters of 3 white soldiers. Basically what he's saying is a follow through, right? And then 4th week, we saw that Marubozu candle, very confident looking candle there. That's probably the longest or the biggest candle comparing to last 3 weeks of candles there. And this one had a lot of wicks here and there, but this one was a pretty well shaved candle there. And with that, we were able to clear above this neckline, right? This is what we call head and shoulder neckline, this prior support, acting as a new support potentially. We don't know that yet, but we saw this thing did come down and kind of retested that level, and then, you know, the price got right back up there. A lot of bears are going to still think that this potentially be that head and shoulder formation where it's going to bring everything down. I think they think like that because they're just looking at this pattern right now, not understanding a long-term picture, the big picture implications and validations and expectations. So I think a lot of people gonna be looking at this as a potentially head and shoulder formation that could start the bull or bear market. And obviously I've been telling you guys that I don't believe that that's what's gonna happen. I think what's gonna happen is this is gonna become major trap, and we see this thing continuing higher to maybe 280. We pull back a little bit, go to 300, something like that, and then, you know, we'll have to reanalyze the market at that point. But I do think that we are going to continue to move higher in this fashion, this grindy moves here. Let's actually go to 65-minute chart, and I want to talk about the action that we saw recently here, these gap and gap ups and gap down moves here. First of all, you can see this moving average. This is actually kind of a crucial moving average here. This is actually 65-minute chart, 50 EMA. And so you can see we came down, fell. We came down to trying to kind of reclaim that 50 EMA. We fell again. We tried again. And then this thing just fell. You know what I mean? That's kind of what happened just in the span of what, like, you know, month or so. And then finally we bottomed here, got up here, and then we fell below it, but we saw a big gap up and we got right back above the 50 MA. And at this point, 50 MA was kind of really nothing because it was hovering all around it, trading all around it. And then something happened here this week. This was what? This was on the 23rd, and that's where we found support. We threw a little bit of double bottom, came down, we gapped that up. But what's really interesting is that let's actually zoom in and talk about this gap action, right? This gap action. So what we saw here, we can see this, we saw this gap up, and this was after extended sessions, right? Market moved about 13 to 14% since late December. And then we saw this gap up, and this level was actually crucial because this was a level where actually bears brought it down, right? You can see that this was, so here, this was a closed, this is where the price closed, and we gapped down to here. So what I talked about last week's the market update video, I thought that gap up should have been higher than this, 265.82. I think it should have been at least like 266, 66.3 or something like that. But we gapped below the inside this gap. We didn't gap up confidently above where the gap actually started, when this downside gap actually started back in December 14th. And so we talked in the last week's video that I think we're going to come back down and retest this gap and possibly filling it. I wouldn't be surprised to see that. And that's kind of what we saw here. So because we gapped lower and then this thing actually came down a little bit and then found some momentum later. So a lot of times when you see that the move is not too confident, we wanted to see a big gap up, you know, getting well above this level. We ended up gapping up here, and then during the intraday it actually pulled back lower, and then we saw some momentum. So not much of a confident move from the buyers. I think from that we saw a little bit of a sideways move, and the next day, I think this was Tuesday or something like that, we gapped down. So what happened was, you know, I think a lot of people are thinking that this potentially be that exhaustion gap, and this was potentially a breakaway gap down. So essentially we could see this as possibly some sort of you know, okay, now I did something, and then now I hate when this happens, guys. In the middle of okay, I'm going to figure out this. How did I do this? Oh, okay. All right, sorry about that. Okay, so this potentially was. It has certain characteristics of island top, right? Because obviously, you know, this isn't textbook island because the gap's not connected, but we saw the gap up here, and then there's a gap down here. And then we gapped it down, and then we actually gapped it right back up today and made this into an island bottom now. So we got back-to-back gaps, and this kind of activity, you see it happening quite a bit. You know, when you see extended sessions like we've seen. I mean, market moved 14% in about less than a month, and so we are extended in the minor term, but you can see that how adamant the bulls are, and was able to, even with the extended sentiment, bulls were able to find some support at that 50, rising 50 MA on the 65-minute chart, and then gap it up and held above it today. Actually, we held it. You can see that. So I think this is going to be crucial. Here's what I'm going to propose here in the minor term. So if we see this thing holding, even if bulls or bears bring it down and fill this gap, and that's still fine. There's a good chance maybe even, maybe this thing retesting that 50 MA, and I think we're going to continue higher. What we don't want to see as a bull is that we don't want to see the market gapping down again and making into this an island top again. Then we have back-to-back islands after island after island after island, right? We can call this an island, we can call this as an island, and now we get another island. Then I think it could get a little bit hectic. Then I think at that time, you can look at this as potentially double top, that's island bottom, potentially this thing coming down a little lower to maybe some of these levels. But if we can able to minimize the probability of that happening by bulls protecting this level, I mean, it's okay to come down, fill it. A lot of times when gap gets filled, it does act as resistance, instant support or resistance. I mean, that's kind of what happened here. You see when this thing gapped up, we filled this gap. You see the gap started here, and that's what became resistance. That's why we saw this pulling back here last 4 hours of intraday trading today, right? So same logic applies here. If this thing start pulling back, the gap is going to act as instant support. So either we come down, fill this gap, maybe meet with that 50 MA, continue higher, or we keep this gap open, make this into an island bottom, right? And then we continue higher. We saw something similar like this in early 2017. And this is very similar price action there. So let's go to daily chart here and kind of look at this here. So you can see a lot has happened in the short term, a lot of up and down shenanigan. And I believe we're going to continue to see something like that happening. I do believe that we're going to come up here, and we do have a tiny gap at 279-ish. This is very, very little one, but I think this is going to be the next resistance, 280. I think the market is aiming for 280. We do see 100 and 200 SMA. I do think that we're going to blow through it. Doesn't mean it's going to like just blow right through it. We're probably going to see something similar to like this, like some kind of bull flagging pattern or some kind of a, congestion or some kind of a sideways little, little resting pattern or something like that as it continues higher. Maybe we see 100, 200 SMA there and we continue higher and then maybe pull back a little bit. And I've been saying this for weeks now that I think we're going to continue to make these little small adjustments where it makes a move. We see 2-3 days of pullback. We see a lot of gap up and downs move, but market continuing to march higher. I think we're going to continue to see that next couple of weeks. I think a lot of people are still wondering if we're going to see this thing coming all the way down, retesting this low at 233. I don't believe that. It's very, very rare that after about 14% move that it's going to come all the way down. I don't believe that we're going to see the retest of lows, and a lot of people are still waiting for it. If it was going to happen, I think it should have happened here at 250-ish or something like that, and then do something like that. Like if we just go back to even 2016 lows, right? If we study 2016 lows here, right here, this is a 2016 lows, and you can see this thing didn't go all the way up and made a 15% move before coming all the way down to retest the lows. I mean, this is merely a couple percent move, pull back. So, pretty snappy move here, just little double bottom, retest the lows, and then made a move. So that's what I'm saying. A lot of times you will see the retest of lows from here to here, but not after about 14% move, not after this thing reclaiming above this neckline, and now we're trying to hold above this horizontal pivot there, and where we have the gap there, so we can have to keep this gap remaining open and even fill it. That's fine, as long as we don't see a gap down. I think the market could continue higher. Obviously, on the weekly chart, all those oscillators, if you track oscillators, all the weekly oscillators are completely resetted. They're completely reset on the weekly chart. So they have room to move to the upside. On the daily chart, however, they are overbought. And we established that fact. We are extended in the minor term. So that's why I think we're gonna see grindy move. We're gonna continue move higher, and then we're gonna see these couple or several days of pullback, some resting patterns such as bull flagging pattern, something like that, because that's what happened last 3 days. This was indeed a bull flagging pattern right there, right? And then we saw that gap up today. So we're gonna continue to see this light move, a lot of gap ups and gap downs, but I think ultimately, the market is going to get up here to retest the 280s. And ultimately, I think the best case scenario, we go continuing this fashion, continuing the fashion to about 300. That will be my best case scenario I can propose to you. But we may see something like, at 280, we may see this thing pulling back, maybe do something like that, throw maybe inverted head and shoulders. That's a possibility. Or maybe this thing going back up and then retesting like this way, right? We don't know exactly how we're going to retest certain levels, and so we need more data to try to predict that movement. But for now, I think with this gap up today, I think bulls are showing that they're very adamant and they have a lot of confidence at this point, and they have built a lot of momentum, right? And I think the shifted in psychological, emotional state happened here. I think that's what it happened. I mean, that gap down definitely was that one last bear's attack, right? You see this gap down, right? You see that this is where the price close, and the next day we gap down, and then we saw the flush. There was like 2% down day that day, and then just next day out of nowhere, bulls brought it up. We gapped it back up, and we thrust it higher above the recent gap. Remember what we talked about just earlier? When the gap gets filled, it does act as resistance. This time, this gap right here, because there was a gap, didn't even act as resistance. Bulls just completely thrust it higher above that gap there. I think something changed there. I think that was kind of a minor term defeat from the bears, where they kind of like at this point, like, don't know what happened, right? I think a lot of people are waiting for the retest of the lows. And so a lot of people are maybe shorting it. A lot of people are expecting that and maybe want to expect to see a lower low for them to go back long or buy that dip. But now the market didn't give you that, and market is leaving a lot of people behind. And a lot of people are maybe still waiting for that, that retest we're probably not going to get. Right. So again, like I said last week, that 233-ish level, we do have 100 and 200 SMA residing in that vicinity. We're probably going to see some contraction of the price in that vicinity, but I think 280 is coming, and then 300 will be next level. And I do believe that this market could very well keep going this way till 280. And if the market really want to show off, then probably keep going this way to 300, and then maybe we see some volatility. Maybe we see 3 to 5% correction at that point. But I have this hunch that I think we could, and just looking at the way the market has been behaving last several weeks, I think we may continue higher. Because right now, a lot of people are missing out on this move. Because a lot of people, I think a lot of even long-term traders, investors, right? I think a lot of people got stopped out at 250 and 260-ish level, right? And as this market just V-shaping high, I think a lot of people didn't expected this. So they're just kind of sitting there watching this thing going, feeling like they're going to miss out on this entire move, but they're going to tell themselves, well, be patient. Well, sooner or later, this is going to pull back, and they'll give me a time to get back in, and market may not give it to them. So we'll see how that plays out. We'll follow up next week. Let's go to Qs. Very, very similar. Look here, this is a neckline. We stayed above that neckline. You can see the gap is open here now, and the 20 MA is acting as support. We have another gap here at around 172s. And so I think the 172 is residing, or we have 200 SMA residing in that vicinity. We also have 100 SMA. I think that's where the Qs is going, possibly this week or next week. On the diamond, however, diamond is very near 200 SMA now. This is a neckline here, right? It has been acting as support, and there's a support there. We pull back to that level, right? I'll adjust this a little bit. We saw a little bit of bull pennant pattern right above the neckline, and we gap that up, and now we're holding that gap. So I do think that we have a little bit of complication. We're probably gonna have some complications around this vicinity at 250, 251, possibly continuing higher and pulling back, filling this gap, and then going to 260. Maybe fill it, maybe just retest the gap area and then going up. I'm not sure exactly how that's going to play out. Even if you fill it, even if you retest this neckline area, they'll be still bullish, coming back down and then going to 260. I think that's what's going to happen here in the diamond. One last one, Russell 2000 here. I'll let you guys go with this. Russell 2000, this is important pivot. And we've been talking about this pivot quite some time now. This is the prior resistance acting as new support, and then we had some support here, and then we had a recent minor term support there. Recently, when we saw that bull flagging pattern right there, that's where we found that support in that vicinity. We saw 20 MAs now rising, 50 MAs now moving sideways. We gapped up above that level. We slightly got below it. We gapped up right above it. Unlike other indices, Russell 2000 is actually have a full candle here. We don't have a top lower wick or top wick here. We actually see that we held up very well here. I think Russell 2000 is waiting on to reclaim this 157-ish level. That's the level where you can see that 200 SMA is hovering. 200 SMA did act as strong support here. That pink moving average is 200 SMA there. So I think that's where 200 SMA residing at this point is 157. And we got a little bit of these recent highs at 153. So 153, 157 is going to be, I think, next target for Russell 2000. In a perfect world, I would love to see this thing doing this, doing that, and do a little bit of inverted head and shoulder formation. If we do see something like that, that's definitely a good level for possibly buying into it if you want to make things a little bit more safe. But there's nothing safe in the market. but you want to see actual cultivation and uptrend, because obviously, technically, we're still in a downtrend. The intermediate term, we got the high, lower highs, and got the lower lows. So I mean, we're still technically downtrend in the intermediate term. We are obviously in uptrend in the major primary term, but we may see something like this, but maybe the market knows that's what everybody's looking for. We may see going up and doing something like that. That's something that we'll have to reassess the situation when we get there. But I think 157 is pretty strong at this vicinity here. 157, 158, 160-ish is going to be strong resistance. I have a feeling it's going to poke its head up higher, and a lot of people probably going to chase this, right? And then a pullback and then going higher. I kind of feel like that's kind of what's going to happen here on the spider as well, where, a lot of people are probably looking at this as a, well, 280 is the level that a lot of us are going to be looking at. And a lot of people think that, well, when it's poke its head up, maybe chase it, but market is going to come down, maybe punish them before moving higher. But again, I'm getting too ahead of myself, but I do believe the market could continue to climb higher this way, in this fashion, like we've been seeing last 4 weeks. And we will see a lot of shenanigans in the minor terms, some up and downs, gap ups, gap downs, gap fill action. But as of today, I do think that, and even just looking at this gap up today, what we saw, this gap up, held this gap up today, I think the market is ready to get to 280 in about a week or two, unless we see some more complication around 200 SMA there. So, and once we get there, I think it's gonna be very, very interesting to see, are we gonna come back down and do something like that through an inverted head and shoulders, or are we gonna just go up higher and then pull back later and then do something like that? Or are we gonna go up and maybe, consolidate before going up? But either way, I think we're going to go higher. Either way, the market is going to be bullish in the long term. Either way, I believe the market is going to do well this year. Either way, I believe the market is going to minimum 20% to possibly 30 to 35% year to date by the end of year. So that's kind of what I forecast. And so let's see what happens next week, and we'll follow next Friday. We'll go from there. You guys have a wonderful weekend, and good luck trading next week.